Hello, everyone. I'm Stephen Fox. Welcome to my channel. We received good news on Friday, the last stock trading day before the Christmas holiday, and the numbers were good. And we're in a world where good news can be bad news to a certain extent because we're walking the tightrope. We're walking the line. We're in the Johnny Cash market. We're walking the line between inflation and recession. And too good of inflation numbers can mean an oncoming recession. Now, I think these numbers were good, but they weren't that good. But it starts the wheels turning that, well, maybe things are going to slow down too much because the history in the past, when it starts to go down, when things start to settle down, they sometimes suddenly just fall off a cliff. And we haven't seen that happen yet. We've seen some gradual coming down, which is the Goldilocks scenario, which is what we want. When we look at these inflation numbers, the core inflation increased by 0.2% for the month of November. And so the core inflation for the year on year was at 3.2%, which was about what was expected. But the core inflation has been running low. And really the problem is when you look back a year, the last 6 months have really been good and have been in line with the 2% target. It's the prior 6 months before that's jacking the core inflation rate up to 3.2%. And when you look at the headline number, that was really good. Inflation decreased by 0.1%. Big deal. But we'll take any decrease we can get because we haven't seen a decrease in like forever. And it's mainly due, I think, to oil prices coming down. And so the month on month came down 0.1%. And the headline inflation came down to 2.6%. And if you look at the last 6 months have been in line with the Fed's goal. It's just the first 6 months of the past year have to fall off for that number to improve. But if inflation stays where it's at, those months drop off and the inflation number is going to improve. And that's why Powell is so cheery about, we're talking about rate cuts. And the other numbers coming in on the economy are good. On Thursday, initial jobless claims came in at 205,000. 202,000 were expected. Now, it's just a little bit more than what was expected, which is sort of perfect for the inflation data. And it's okay with the recession fears simply because it's not falling off a cliff. Jobless claims are just increasing somewhat. And the same thing with the GDP. The third estimate of GDP came in at 4.9%. 5.2% was expected. So it's just a little bit lower than what's expected, which is good for lower inflation numbers, but it's not falling off a cliff that would lead to a huge fear of inflation. So the two biggest fears are if the job numbers all of a sudden just collapse or inflation just takes a dramatic downward spiral, like drops by a full percentage point. So we can celebrate somewhat because the stock market went up for the 8th week in a row. Yay! And I have my usual lists, the usual suspects, the usual stocks I've been trading for the last couple of weeks, and they've done pretty well. And I only have a concern about one of them, which I will share with you. This rally has been encapsulated within the last 3 months, so I mainly will be focusing on the last 3 months. And there's my 3 major artificial intelligence stocks, which are NVIDIA, AMD, that's Advanced Micro Devices, and Super Microcomputer, which is SMCI. And looking at the chart, you can see that they've all done well. AMD, surprisingly, has taken the lead as far as the gains in the last 3 months, probably because they didn't go up so much beforehand. But they've made 45% in the last 3 months. Super Microcomputer, SMCI, in red, has made 25%. But what's bothering me, and this is the only stock that's bothering me right now, is why is SMCI down? It's so undervalued, and I did not like the steep sell-off in the last couple of days. But, still, it might just be profit taking. So maybe I should just calm down, and I am calmed down, and I'm just going to hold it. Last on the list is NVIDIA, the engine of artificial intelligence, and it has made 19% in the last 3 months, but it's kind of just been cycling up and down. It has a tendency to go up. I think it's going to go above 500. We're waiting for it to go above 500 solidly so that it goes to 600 eventually in 2024. There's a lot of artificial intelligence which would not be possible without ASML. It makes specialized machines that produce the chips. They do the lithography, as I understand it. And Broadcom, whose symbol is AVGO, they connect everything to everything. And they also make some artificial intelligence chips, I understand. So both of these are very major, very solid companies that I expect to hold on to. And looking at the chart, you can see that AVGO, Broadcom in purple, has made 39%, and ASML in green has made 29% in the last 3 months. So they've both done very well, and I intend to hold them for a substantial period of time. I've been very pleased with the aircraft division of Rolls-Royce, whose symbol is RYCEY. And I've also been pleased with a stock I invested in simply because it kept showing up repeatedly at the top of my charts. And that's Installed Building Products, whose symbol is IBP. Looking at the chart, you can see that Installed Building Products in purple has made 50%, while Rolls-Royce in green has made 42%. So I'm definitely going to keep a hold of these. I own Canadian Solar for 3 main reasons. Well, actually 4 main reasons. First off, I love solar. Second off, its price to earnings is 8. Third, its earnings growth rate is 22. And it recently has looked very good on the chart for the last month, and it looks like it's headed up, and it means to stay headed up, which I always wait for a stock to act like it has life in it before I invest in it. Last but not least are my 3 bond funds, which are TMF, and that's the triple leveraged bond fund. It's very bullish. And then there's TLT, which is the regular 20-year bond fund. And then I have a junk bond fund, JNK. And you win on these if the Fed is forced to reduce rates because we've gone into recession. And you also win if they reduce rates if they've been successful in engineering a soft landing and just reduce rates simply because inflation has gone down so much and they've been successful. And looking at the chart, you can see the triple leverage TMF has made about 23% in the last 3 months, while TLT has made almost 9%, and my junk bond fund has made almost 5%. These are doing very well for bond funds, and they're sort of my insurance, if you will. If the market crashes, they go up. Because the Fed will be forced to reduce rates, and they will go up if the Fed is successful in engineering a soft landing. Be sure to like and subscribe so you see how this all pans out. And thank you for listening and watching. And I think we're going to have a continuation of the Christmas rally. I'm sort of banking on it, and I don't want to be forced out of this rally. It looks like it's potentially too good. We may have some slowing down after this rally, but I want it to roar and into the new year. Thank you.
I'm on my own, broken and alone. I feel the rain crashing down all around this empty town. I'm searching for the lost and found, but you don't care, you're unaware.